been a journalist in the industry for about 20 years now. I only write about things with legs at each corner and not with wheels. Write for the major magazines, dairy magazines, occasionally for the grocer, and do a market report every 2 weeks for the Provision Trade Federation and some individual dairy companies. So, what I'm going to talk about is milk production, the UK market, the global market, prices, and my thoughts on where we are going wrong. I've got a few slides, so I'm going to rattle through them fairly quickly. First of all, I'm going to talk about milk production. That's the amount of milk we normally produce during the year. And it's gone from October to December because basically the Great Milk Rush started in October 2013. And I'm going to show you how much extra milk we've produced. That's what we normally produce. That's what we've produced over the last 2 years. The red line being the latest. I'm going to take you back to April this year now. The milk we have produced since April, compared to the long-term average, is 732 million litres. That's equivalent to 3.5 million litres a day, 125 reload tankers a day, 25,000 tankers in total, which would stretch from London to Liverpool. If we include Ireland, there's 1.5 billion litres more since April. There's 50,000 tankers, 450 miles worth of tankers if you queued them up, and they'd go to Dundee from London. And if everybody in the UK had to eat the amount of milk we have produced, based on a consumption of 200 litres per person per year, we'd need 7.5 million people since April for the production from April, a 12% increase in our population, and for the year as a whole, we would need as many people as we're going to get in 2040, and we need them now. That's if we're going to munch our way through all the extra milk that we've produced. On top of what we produce, remember, there's the imports, and we import the equivalent of about 260 million litres. So where are we as far as the UK market is concerned? I'm not going to go into detail about the Battle of the Bottle and the price wars. We know where we are. We know we are a price political football with the retailers, and we know that that has a significant effect on the farm gate prices. I don't buy into the idea or the theory that there is no connection between the retail price of milk and the farm gate price. As far as I'm concerned, the more money there is at the top end of the supply chain, the more has a chance of coming out of the bottom end to farmers. So where are we on prices? I hope you can see the scale on the back. Jan 11 to September, cream and butter, we're basically pretty near the bottom. Cheese, we are at the bottom. In terms of where we need to be, and by that I mean for farmers to get a 28 to a 30 pence milk price, we're about 60 to 70% of where we need to be. But getting from there to that 28 to 30p is a huge, monumental challenge. I'm going to specifically talk about cheese now. Every manufacturer is making a lot of cheese in the UK and Ireland. We're importing 9,000 tonnes of cheese a month, equivalent to nearly 1 billion litres. Currency's helping, but there's no change in consumption. And we're exporting about 400 million litres. And at this point, everybody's going to say, oh, the bloody Irish, they're making all this cheese and they're bringing it over here. That's the average cheese imports over time, and there isn't really much change. So, Jack, I'm going to stick up for you. That's good, isn't it? Cheese sales are going up. Fantastic. Look at the price, though. That's why they're going up, because the cheese price is coming down. And farmers bemoan the fact that there's cheese on discount in the retailers all the time, and everybody hates to see it. But if it wasn't on discount, we'd have an even bigger problem than we've got. It has to be sold, and the only way of selling it when chicken and rival protein is so cheap is to discount. So the recovery. That's what everybody wants. That's what you're going to get. A real bag of wool. And why? Demand is supposed to be 2% a year, year on year. According to the experts at the EDA, European Dairy Association conference 3 weeks ago, is 1.7% and slowing. That's pretty rubbish. Milk supply, the EU is growing, the US is growing, New Zealand was growing. People think it's going to be down this coming milk year, maybe significantly. They are culling heavily, but what if they're not going to be down? And to depict it all, this is where I am going to blame you, Jack, that's what the countries are doing. Producing one heck of a lot more milk at a time when demand is crap. So, in rough terms, we produce about 622 million tons of milk in the main producing countries. Not much of that is traded. And if the EU grows its milk production by 2%, say, it's 3 million tons, but the domestic EU market is saturated, it has to be exported. Thus, we have to be competitive with the likes of New Zealand, US, Australia, whoever dumps product on the market, which is why we are affected by the global market. So, what drives this global market that everybody talks about? And it's Jack Nicholson. It's fear, it's nerves, it's panic. Right? When the price soared a couple of years ago, it's because everybody was concerned about the drought in New Zealand. Now, nobody gives a monkeys. There's loads of stocks about. All the buyers are relaxed. They know that if New Zealand gets a bit tight on supply, there's plenty in the EU, there's plenty in the US. There's loads of product around. So, everybody familiar with the global dairy trade? Anybody not? Okay, so there are the prices. Continually gone down since January 14, with a bit of a break earlier this year. Again, because the traders thought New Zealand was drying up and there was going to be a shortage of product. Fonterra then pulled product off the market, did a bit of jiggery-pokery with their volumes, prices went up. Now it's come back down again. So where is the auction? Where are those prices in relation to where they need to be? And there, whole milk powder is about 3/4 of the way where it needs to be for farmers to get that 28 to 30p price. Skim milk powder, 60%. Now, the next slide I'm going to put up, there's a heap of figures. I want you to ignore all the figures. There they are. The auction prices at the bottom are the latest auction. The one at the top is the auction 2 months ago. And coming across are the forward prices for the next 6 months. And I'm going to show you how they've changed. Okay, so auction at the bottom, auction at the top, forward prices. This is when things are crap. Sea of red. This is when things are good, obviously. The figures are actually $100 difference between the auction now and the auction a month ago. So $100 up green, $100 down red, yellow somewhere in the middle. The latest auction at the bottom is that. So a bit of a mixed bag. However, still crap. And I'll tell you why it's crap, because that's the equivalent milk price. 20p. Was about 9p, I think, at one stage. But it's now 20p. And if farmers need 28p, got a long way to go. So how does our price compare over time with the GDT? And there's the slide. There is a relationship. So where are we now? The last auction was down 3%. The next auction is today. And if we get 2 declines, the traders' sentiment will again drop significantly. Buyers are not worried about the price at all, because there's plenty of milk about. As far as the UK is concerned, and farmers may have to correct me on here because I don't really know, to be honest, that forage is good. Don't know anything about the maize forage at the moment, but I think that forage is good. We've got plenty of product in store, and the flush, relatively speaking, isn't that far away. I know we're in November and the flush is April, but if we started to empty those stocks now, by the time we've eaten away at them, it'll be time for the flush again, and we'll start building them up again. So how is all of that and that sentiment affecting things? These are the futures prices from mid-September to mid-October. Again, green is good, and there is some positivity in the market, especially if you look at, say, January, butter increased 262, 265. This is what's happened since then. Not good. If we look at the New Zealand Southern Hemisphere futures, that's what it was. It was all looking pretty good. Now look at it. Pretty bad. So, milk prices. Anybody seen that slide before? That's what I think it represents. Sure glad the hole isn't at our end. So what we have in the UK market is we have the princes and the paupers. The aligned pools, the non-aligned pools. And I'm going to show you the difference. Those are the average aligned prices. Nobody could argue with that. There is very little volatility in there, and everybody can live with that, that trend line. Non-aligned. And do you know how much the aligned farmers have had over the last 5 years? That's what the aligned pools, according to my calculations, have netted. And 400 million of that 500 million has gone to 15 to 18% of farmers. So, what have we got as a result of that? Who remembers that? I look down on him because I'm an aligned producer. And I look down on him because he's first milk or out of contract. Silly Berks. I look up to him because I'm a normal, non-aligned Arla, Muller, meadow farmer. But I look down on him. I don't think we can build an industry where we've got that. And there's a vicious circle happening with these aligned farmers. The very high prices that the aligned farmers are getting stimulates their expansion. More milk, more and more milk, which lowers the price for the non-aligned. They're having to sell their assets and their best cows, which are being bought by people on the aligned contracts to produce yet more milk, which reduces the price for the non-aligned, and so we go round. And I think we've got a morality issue in the industry. Because I'm not saying that the retailers have to save the industry, but you've got some retailers who pay a brilliant price for their liquid milk, they pay a brilliant price for their mature cheese, their mild cheese, they don't get a very good price. There's another vicious circle too. A surplus of low product prices reduces the milk price. Farmers react because they don't like farming incomes by producing more milk. More milk comes onto the market. It's turned into low value products, which are stored because there's no market, which reduces the milk price, and so we go round again. But are farmers actually getting a fair price? Now, I don't know whether this is a fair and reasonable way of determining that. I'll throw it open to people for debate. But what I've done is I've taken the average of all of the formulas, the indexes, the cost of production prices that are relevant to the UK. So I've taken the EU global price as measured by Arla or newer, the Irish Dairy Board, as was, price index, and converted it into pence a litre. I've taken the Ulster Farmers Union price to reflect what happens in Northern Ireland. I've taken the Scottish NFU's formula price that they don't talk about anymore, but I do. Sorry. I've taken the liquid contracts, formula contracts from Dairy Crest, and which was Muller-Wiseman, which is now defunct, I think. The cost of production, AMPI, which represents butter and powder, and cheese. And the line you get is that. So if you average all of those out, that's what I would expect the farm gate price to be. And it's that. It's pretty close. Is it a fair way of reflecting fair price? One to debate. So where are the processors? Well, they're under the cosh. They're losing money. They've got challenges. There's rescue bids. There's failures. Cricketer being the latest. But they are investing. They're rationalising. They're exporting. They're innovating. They're communicating with consumers. Arla are doing it. Muller are going to be doing it at the Olympics. Fair play to them. They are on the same side. I think they're pretty well placed for the future in terms of the investment in the processing and the calibre of the processing that they have. Yep, they're getting beaten up by the retailers, but we all know that. But they do struggle at peak milk. We don't have sufficient capacity in the spring. And yet more farmers are producing more milk in the spring. Fortunately, we can ship a lot of it to Ireland. So there's another brownie point for you, Jack. Price indications. Where are we going on price? What do I think is going to happen. If we take the GDT forward contracts prices, if we take the northern and southern hemisphere prices, futures prices, we take an estimation of cheese forward prices, because I don't think they're going to go anywhere anytime soon, and whey forward prices, and apply them to a UK situation, I think this is the likely trend line to April next year for the next 6 months. So if you're expecting me to say things are going to get better anytime soon, I'm sorry, on the best available data I can find in the marketplace, they're not. And the other thing I'm going to draw your attention to is your local garage. Not that's for anything that's in the chiller cabinet, but the relationship between the milk price and the oil price. And there it is. Again, a trend line. And basically that's because the oil countries can buy dairy products, but when their income is down because the oil price is down, they don't buy as much, or they don't want to spend so much on it. So, conclusions. Production is out of kilter with demand. The market is rubbish and will remain so for a while. The rich are getting richer and the poor are getting poorer. But I think that there will be some surprises in the Tesco review. I've had a bit of a briefing on it already. So I think there are some surprises coming there. Milk prices fair and reasonable? Maybe. The retail price war and global markets are wreaking havoc. No quick turnaround. And one of my main messages today from the production side of the industry, we are production driven. We are not consumer focused. We are obsessed with production, not about consumers. So, my thoughts on where we're going wrong. Our home market is the most important home market we have got. And we are letting these interlopers come in, like Ponzi soya, almond, coconut, rice milk, and taking our high ground. The free-from ranges in the supermarkets are positively booming. And we've got huge opportunities for dairy and its naturalness and all of it entails. So why so much focus on export when we are allowing our market here to decay? And my view is if we fought more for our image, maybe the retailers wouldn't use us so much as a punch ball. And there's a coffin. And some might think that now I'm going to say the dairy industry is going to an early grave. Well, I'm not. But I'm going to re-quote what Dr. David Dobbin, chairman of Dairy UK, said at the EDA conference. And he said that the people who consume the most dairy products are the older people. Young people don't and aren't, apart from pizzas, which is why the likes of Glanbia is booming. Our consumers are falling off the perch. We need younger ones. We need to promote our products hard and fast, and we need to go tell them how great dairy is. Thank you very much.
Mm.